Is now the time to buy Nvidia? Let's take a look. So first, we can see Nvidia is in a super duper strong trend right here. And that's what you want to see, right? You never ever want to go against the trend of any stock. It has the 10 over the 20, price over the 50. This is what I like to call the outlier trend template. And this will always tell you the direction of the stock. The 10 EMA is your short-term moving average. The 20 period EMA is your intermediate term. And the 50 EMA is your long term. Now, does it mean that every time they cross, it's going to go almost vertical like Nvidia did right here? No, it doesn't mean that, but it does tell you which direction the trend is going. And you can see very easily when it's going down, and you can see very easily when it crosses and when it's going back up. So is now the time to buy Nvidia? That's a great question. It is certainly in a bullish trend, but what I want to do is actually evaluate it using the 9 criteria that go into the slingshot setup. So first, it starts with the market, with the trend of the market. So right now, the trend of the market is also bullish with the 10 over the 20, price over the 50. So the market is trending up higher. Absolutely. But we do have a sell signal on the SPY. And because of that, I am not interested in taking many trades right now, right? When the market has a sell signal, that is a warning sign. Okay. So I'm going to leave this in red. And then breadth, let's go look at the market breadth right now. Now, market breadth has picked up, but keep in mind, even though this has picked up, this still shows only 34% of the stocks that we cover, the 2,600 stocks that we cover, only 34% have a buy signal. The other 2/3 are sitting on sell signals. And it is close to having a crossover right here. So we'll have to see if we get a buy signal and we get this crossover here, that's going to change my perspective very, very quickly. We are getting more and more uptrends, but we're kind of flat on the number of downtrends. So we're not seeing a lot of stocks flip over from downtrends to uptrends just yet. And I just showed you how to measure that. Next, let's go to the sector. So Nvidia, of course, is in the tech sector. The tech sector's average fear and greed score is going down hard and fast. In fact, it's almost out of greed and into fear. This is the average fear and greed score for the entire sector. There's 163 plus 171, 163 plus 171. There's 334 stocks in the tech sector, and just over half of them are greedy. The other half are fearful, and it's going more towards the fear every single day. So that's not going to help the sector at all. But let's look at breadth. Breadth isn't great either, right? We're seeing a slight uptick in the number of uptrends. Remember, this chart down here is actually just these two charts combined. And then looking down here, we still see a very depressed sector. Only 22% of the sector has a buy signal. So this is not great at all. So we're not off to a great start on Nvidia. Next, let's look at the stock. Well, we talked a moment ago about how it definitely is in a bullish trend. So we'll light that up green. We did see a buy signal right after the sell signal right here. In fact, these signals have given only 1,908% following these buy and sell signals. So that's pretty epic right there. It does have a buy signal. Just came yesterday. Next, the fear and greed. The fear and greed on Nvidia is going down. So even though you see a buy signal right here, don't take that in a vacuum. You want all of the momentum working for you. So fear and greed is going down. And there are no outlier blocks on top of Nvidia because these are new all-time highs. Nobody is trapped waiting to get out. Here's an example of an outlier block right here. It was in February. Buyers got stuck in this. And the very first time that buyers got back to break even in May, it really struggled. And then after about 2 weeks of struggling, it finally broke through, right? So we don't have any outlier blocks, no trapped buyers ahead. So we'll light this up. So actually, Nvidia shows to be a weak sell for me, on Nvidia. But today is Ask Me Anything Friday. And so what I want to do is I want to go through a list of questions that the viewers who are watching live have submitted. And I would love to answer them and help you learn how to trade effectively. So Mike has a question. Does your love for a product like Dutch Bros make you want to stay in the stock? So I do love Dutch Bros. I am a Dutch Bros princess. And because of that, you could say if you love the stock and you love what they do, then you should own the stock forever. I disagree. Now, here's a great reason why, right? I didn't even know that Dutch Bros was in a big, ugly downtrend for ages. And then it looks like it popped up after earnings and just got a buy signal. So let's go look at Dutch Bros chart real quick. So looking at this, I don't know why TradingView's loading slow today, but it is. Looking at this, right? One of my key aspects that I like to tell people is all stocks are bad, and every once in a while they act right. Dutch Bros was acting really bad for a minute, downtrending for a minute. And just now, just right now, is it back to break even for the people who were buying it in June, right? So 2 months just to get back to break even. There is no world where even if I love the stock as much as I love my Dutch Bros order, that I would hold on to a stock as it's going down, right? But you want to talk about when a stock is acting right? That is when a stock is acting right. I will gladly hold my my iced protein coffee with sugar-free raspberry and sugar-free white chocolate with 2 Splendas. And also get my kids the blended lemonades with Shark Attack flavor added. I will gladly hold it while it's going up like this, but I wouldn't even be buying that stock with your money as it's trending down, right? So no, even if I love a stock, even if I love what the company does, it doesn't mean that I love the stock for sure. Let's go to an options question. Kostya has a fantastic options question. We are calculating the extrinsic versus intrinsic value of an option. Do you divide the extrinsic value by the option price or by the intrinsic value? So one of my trading rules is I want to keep my options price and extrinsic value as low as possible. So let's pull out the handy dandy calculator over here. And the way that I do that, where's my calculator? Come on. There we go. The way that I do that is I usually go for the 80 delta. So we'll go for here. And looking at the 80 delta, we can see this particular option. I didn't choose this, just the first one that popped up here. Palantir, August 29th. Looking at the 81 delta, the extrinsic value is $2.88. Now, this is our uncertainty value. This is the value that will decay no matter what every time forever. I'm looking at it as a percentage of the ask price because this is what I have to pay for it, right? I could look at the mid. That would be lucky if I could get that. If I try to do it at the bid, not the mid, but the bid, if I try to do it at the bid, I'm never going to get that price. So I take the extrinsic value and divide it by the ask price, which is 23.20 in this case, to come up with 12%. So 12% of this option will decay in value. And I actually like that. My limit is 20%. Well, 20% is my ballpark. My absolute will never take it is 30%. You couldn't get me to buy an option with 30% or greater extrinsic value, but 12%, that looks great. So that's how I calculate the percentage of extrinsic value. Max has a question, since we're on the topic of options, pros versus cons of margin versus options. So pro with margin is that if you're buying shares, well, first off, if you have let me rephrase that. Whenever you are setting up your account initially, I would always go for margin. Always, always, always go for margin versus a cash account. A cash account, you have to wait for settlement periods. A margin account, basically, there are some restrictions. I'm not going to get into all the details and the weeds of that. But with a margin account, you're going to have a lot more freedom, a lot more flexibility, and you don't have to wait for the settlements as much. There are potentially cases where you would, but overall, I've never had to wait. Then once you have that margin account, there is the ability to buy. Basically, most brokers do this. Your broker could be different. Let's say if you had an account with $10,000, you could actually go out and buy $20,000 worth of stock. Ooh, that sounds great, right? The other 50% of that account value that you just put into the stock, you're going to have to pay margin interest on. Usually it's not all that much, but you now have a greater hurdle to profitability. Whereas when you trade options, you're really not handicapped. You're not hamstrung, right? You can buy as much options as your buying power will allow. For example, if you had a $10,000 account and you're buying 10 $1,000 value options, there you go. There's your account. You don't have to worry about the margin interest. So in a nutshell, always get a margin account versus a cash account. And I prefer options over shares every day of the week, and definitely twice on Sunday. Gene has an options question. Would you ever consider buying leaps? No, and I'll jump into why. So let's look at Palantir right here. Let's start with like I say, the 80 delta right here was $23.20, which is already expensive. And let's go for a leap. Let's say February of 2020. This is approximately when Chris is going to turn February 20th next year. Yeah. So I will be 40 years old in one day when this happens. That's the day after my 40th birthday. And I want to go to the 80 Delta. If I go to the 80 Delta, so approximately the same risk profile, it's going to cost me $56. $56. Now, that may not sound like much. $56, that's nothing. But multiply that by 100, so $56, $56.70 times 100, that's how much it comes out per contract, right? So $5,600 per contract versus $2,300 per contract, right? So it's almost half the cost out of my account, which allows me to trade twice as many if I go for 21 days versus 196 days. And in reality, my goal here is to maximize the number of contracts I can take with as little risk as possible. I am of the persuasion of have a very, very tight stop and trade as big as you can to fit for that tight stop. Now, there are other people who say have a very loose stop and then trade smaller. I disagree. Because if you are trading with the tight stop, you'll find out if you're wrong very quickly. If you're trading with the loose stop, it's going to take a while to find out if you're wrong. Either way, you're going to be wrong. It's just one of those happens in a couple days. One of them is going to happen in a couple weeks. And then you can trade on a bigger size and get basically the same amount of risk versus trading on a smaller size. And then finally, later on, finding out that it's not going to work. Or when it does work and you are winning, you win less. So that's my personal persuasion on that. And by going with a shorter dated option, that's going to allow me to buy more of those contracts in my account. It's a great question though, Gene. Really appreciate you. Wes has a great question. What is the most important trait a good trader should have? The ability to follow a plan. Now, Wes, I will tell you, this is something that I struggle with for ages and ages. And I had the opportunity to work with 5 different market wizards: Mark Minervini, Jack Schwager, Larry Hite, Jason Shapiro, and Tom Basso. One thing that all of them do is have a plan. And specifically when I worked with Larry Hite, we talked about how important it is to have a plan and to follow it. One thing that Larry said to me, I'll never forget, he said, what was the point of making a plan if you never follow it? Right? I think he actually said you could just take your plan and just throw it out the window. And so I would say that is the most important thing as a trader, right? You can come up with all kinds of different strategies, all kinds of entry methods, exit methods, whatever the case is. But if you can't hold yourself accountable and actually follow through on what you said you'll do, you're never going to be profitable. It's like driving from Dallas to Disney World, right? You can drive the entire way with the map. Google Maps will tell you exactly where to go. Funny story, funny side tangent. Last summer we went to Scotland and we went to Ireland, and we used my phone and the Google Maps on my phone the whole time, and it works great in America. But every once in a while, we would take a wrong turn or whatever, and it would tell me to drive 8 miles. This happened more than 5 times, literally 8 miles out of the way to a roundabout so I could turn around and drive back. And the second time that happened, I'm like, what the why did I drive over there for the roundabout to come right back? So like I very often was looking at my phone, like zooming out, zooming back in, making sure it didn't take me on any random wild goose chases. And then we were on the Isle of Skye, which is unbelievably beautiful, but the roads there are absolute shit. I have never seen worse roads in my entire life than the Isle of Skye. They're this wide, 1 lane, and there's cars coming both directions. So rather than make a 2-lane road, they make it this wide and 1 lane, and then they put cutouts every, 300 yards or so. So you pull over amongst all the sheep that's running around you to let the other person pass. What a stupid way to build a road. And then Google Maps took us all the way to a ferry that had freaking closed for the night. And now I'm like, so, like 2 hours out of the way to get to the ferry closed. And then I have to drive 2 hours back and then 2 hours around to get to the bridge. We were headed to Glenfinnan that night, and Glenfinnan, it was the Glenfinnan house. Absolutely gorgeous place. Probably the most beautiful place I've ever stayed at in my entire life. Has mountains and this big, beautiful lock right in front of it. And over off to the left is the bridge from Harry Potter, where they're driving the car around where the train is at, the Glenfinnan Viaduct. Absolutely gorgeous. Totally off topic, I know. But when you follow a plan, you can drive from the Isle of Skye, from the ferry pools, if we want to be specific, on Skye over to the Glenfinnan house in Glenfinnan. Now, there's going to be all kinds of twists and turns and sheep and all kinds of stuff in your way as you're driving from one place to the other, right? But you still have to execute the plan. Now, where I was going with this, as I like to do, is go off on tangents, is that even though I had a plan to get to the Glenfinnan house, but the ferry was shut down for the night, I still was going to get to the Glenfinnan house. Like, there was no way that I was not going to get to the Glenfinnan house that night, even though we arrived at 11 p.m., right? And the kitchen was shut down, and the bartender had some mercy on us and made us some salmon sandwiches, whatever was in the back, and gave it to us. We were going to get there, period, full stop. Because of this, I was going to make sure that even though I followed the plan and it didn't work out, I was still going to get there. So I had to backtrack and go around, take the bridge, and go all the way around that way, right? And to the point of that story is, the most important thing to do as a trader is have the ability to follow your own plan, right? You've made that map. Now you are the one who has to execute on following through on that map. Elsewise, why did you even make the map? And that's extremely hard. It's extremely hard. Very long-winded answer. Justin has a fantastic question, and I really appreciate this question. When would you choose a phantom roll versus a true roll when an ATR level is reached? So let's look at a couple examples here. I think hymns might be a good example, or maybe not. Let's look at PLD. Okay, this will do. Now, this is one I was doing some testing on, and let's say if I had bought it and it actually went up to this level right here, and I'm ready to roll. Okay, ready to roll my options. Rolling the option is just basically moving from one strike to the other. But when you do, you take your partial profits off the table, you get capital in your account to trade with right away, and you keep the trade alive, something you cannot do with stock. It is an impossibility. Now, if this does happen, and you get to this point, and the options are illiquid, right? There's not enough open interest. It's too much extrinsic value, whatever the case is. It is a pure options liquidity issue. Then I'll say a phantom roll. Now, why would I call it a phantom roll? What does that even mean? That means I'm still going to treat it as if I rolled the option, meaning I'm going to get aggressive on my exits, even though I didn't actually roll the option. So that's really the reason why. Just boiling that down. Great question, though. Andrew's question. On the slide that shows the option contract sizing, let me go to that slide real quick. Hold tight while I get there. Here. Okay. So the question is, on the slide that shows the number of option contracts for position sizing, it says that 1666 shares equals 20 contracts. I thought that contract always equals 100 shares, so wouldn't that be 16? Andrew, this is a fantastic question. I want you to know that I really appreciate you thinking through this. I am usually following in at the 80 delta. I mentioned that a few minutes ago. That is my wheelhouse. Now, it might be a little bit more, it might be a little bit less, but because of that, delta represents a couple things. Delta is essentially every one share that you own is one delta. Okay. If a delta is actually really cool, it measures a lot of different things. If you see one that's a 50 delta, that means there's a 50-50 chance that it's going to be in the money at expiration. So delta represents the number of shares. So one share is one delta. The delta also represents how likely it is to be in the money at expiration. And delta also represents the change in the option price for every $1 change in the stock. So a delta of 85 in this case means that for every $1 change in Palantir, this option price will go up by 85 cents. Pretty cool, right? Now, my wheelhouse is 80. If your wheelhouse is something else, then I would recommend going with that. If your wheelhouse is 10, then that would tell you how many option contracts to get. If your wheelhouse is 50, that would tell you how many option contracts to get. But you are exactly right. If you were to divide by 100, then that would get you 16 contracts. It's a great question. Let's see. Guillermo says, do you hold any long-term investments, stock or index funds? I mean, honestly, no. And the real 100% answer, you've heard me say it before, and I'll say it again for the rest of my life, is every once in a while, a stock acts right, but all stocks are bad, right? Now, SPY was definitely acting right for ages over here, right? But there are times when SPY is not. Right? There's times when SPY is not, and then there's times when SPY is, right? Your goal as a trader is to be in the stock while it's working and out of the way when it's not, right? You're never going to catch the top. You're never going to catch the bottom. You can catch the 80% in the middle of these moves. So personally, I don't, but that doesn't mean you don't have to, right? If you build that into your plan, you could totally do that. Since we're on charts, David has a question. Why'd you decide to focus on short EMAs compared to Minervini's focus on 150 and 200? So Mark trades with a much wider stop, a significantly wider stop. Mark's one of the market wizards I worked with. Because of that, he focuses in on longer time frames, longer durations, right? In fact, whenever you find a mentor, right, you want to learn as much as you can from that mentor, and you want to pick and choose the things that you can identify with, you can internalize, you can fit into your trading plan. And it doesn't mean you have to do everything exactly the same as them. So that is the real reason, is that Mark does a lot wider stops than I do. Sounds crazy, but it's very, very true. And then there's also times where Mark will give something a nickel, and if it doesn't work for that nickel, he's out. And because of that, you've got to come up with a plan that works just for you. David says, I've been reading Trade Like a Stock Market Wizard. You mean Mark's book? Trade Like a Stock Market Wizard? I'm stuck in my chair. Trade Like a Stock Market Wizard. This one here. Speaking of Mark Minervini, how about that? It really details about why PE, why fundamentals are noise. It also explains why Adobe just sits there in a stage 4 losing downtrend despite having good numbers. Let's go to Adobe real quick. Let's go to Adobe. And let's look at this, right? Dude, this is a horrible stock. This is a horrible, no good, very bad. There's no way I'd buy this with your stock. No, there's no way I'd buy this with your money kind of stock, right? And because of this, there are still people trying to bottom feed the entire way. But by the way, tell me order blocks don't work. Go ahead and tell me order blocks don't work. This order block back from May of 2023 was huge support. And now it's right at that level again. Huge support. The question was, it really details why PE is noise, right? It absolutely is noise. And in fact, we watched a video not long ago. It was an hour and a half long video where Mark was talking about his trading strategy. Not once in that entire video did Mark reveal anything about fundamentals, anything about the company, anything about the news. Every single second of that video, Mark talked about the charts. Mark talked about the price. He's one of the greatest traders of all time. And if one of the greatest traders of all time spends 0 seconds explaining his trading strategy with fundamentals, why are you wasting hours and hours of your life trying to come up with why fundamentals is so important? I don't know. I don't care for fundamentals at all. News can be interesting. But I wouldn't base my trading plan on that. Oh, that was a great question. Skinny Buff Guy has a very important, very on-topic question. Why is Christopher Uhl so awesome? He's just a random guy on the internet, but he was twice awarded top 100 people in finance. He was mentored by 5 of the market wizards, the best traders of all time. He's been successfully trading since 2009, and this is where outliers like you and him save time, make money, and start winning with less risk together as a team. So go ahead and subscribe if you haven't already. I mean, that's my answer. Let's see. From Lenny, does it matter to you if you're positioned at a certain call strike and there's high open interest in puts at that same strike? Okay, very interesting. Let's take a look. Let's go to Palantir. Now, I have no reason to have this up. This is literally up for whatever was the last one I looked at. So don't read into that. And let's go to one that I would be interested in. So like right here, all right, the 167.50s. And I look over, its open interest is about 400 on the side and then 400 on the puts. So I'm not really stressed on that. And let's say we go over here and it's 1100 over this side, 1700 this side. Is what it is. I'm trying to see, like, over here, you look at the call side, out of the money calls, which are just hot garbage. You can see so many calls versus, nobody is trying to transact any puts over here. Let's go to a different stock. Let's go to AMD. Maybe AMD has more noise going on. Let's see. Oh yeah, here we go. Lots and lots of open interest. but still a decent amount of open interest on this side. I mean, truly, the answer is no. It doesn't matter to me. And the reason why it doesn't matter to me is these people, just like these people, are positioning for what they feel is best for their portfolio, and we don't know what that is. Right? These could be just imbeciles out here saying AMD is going to crash. Watch out for AMD crashing, right? And so they're buying all these puts. And at the same time, AMD, let's go look at it. AMD is in this big, beautiful uptrend. Now it's got a lot of overhead resistance, This would be an area that I don't know how long it's going to take to get through here, kind of resistance. But personally, for me, I would focus in on my plan, and I would focus in on my exit signals, and then I wouldn't stress about it. All that kind of stuff is noise. And because there is the ability to see so much noise in the markets, it can really distract you from following your plan. So that's where I would go. Just follow your plan. Patrick has an options question. If the bid-ask spread is too large and your account is mostly cash, would you ever trade stocks instead of options? If the perfect setup was there, minus the spread. Patrick, I'm going to give you a really, really solid reason why I only trade options. Now, this is going to get real deep, real heavy, real mathy, real quick. Okay. Let's go to what I like to use for my position sizing spreadsheet. By the way, at some point in the future, Mahesh and I were talking the other day, this will be built into OVTLYR, so don't stress on that. But let's look at AMD. And let's say, for example, $100,000 account balance, 5% risk per trade, and approximate option delta that I'd be looking to trade is 80. Okay. So looking at AMD, and we come over here, the share size for this risk profile would be 318 shares. That would be 55% of my account going into one trade if I was just using the shares. Now, if I go into AMD and I go to the August 21st or August 29th, which is 21 days away, and I go to the 80 delta and I get the price, let's say it's $18.10. Okay, $18.10. There. And then I buy 3 options for $18.10. That would be 5% of my account for approximately the same risk for the approximately same outcome. If I used options, it would only be 5% of my account. How cool is that? Only 5% of my account. That is the reason why, even if the stock was set up perfectly, I'm not going to buy it. I would need to put 55% of my portfolio to have the same level of risk return as 5% in options. Sounds like a great deal to me. Chris in Wisconsin's been watching for about a month. No mention of trailing stops when buying. Are you doing it manually? So, Chris, I never, ever, 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 under any reason, put my stops in the market. Never, ever. Because how many times have you been in a stock? Let's use AMD as an example. Maybe, and this is just an example, don't read into it. Maybe your stop was set right here. And it came down and it hit the stop and it came right back up without you. That super sucks, right? I've been there many, many times. So I only transact at the end of the day if it is below my moving average. So let's say right here, if it closed below my stop point, then I'm out. And you know what? If it goes up, it goes up. But I'm never going to let it take me out midday on a candle wick. Never. So that's a great question. And I have been burned so many times on stupid candle wicks that meant nothing that I only transact at the end of the day manually. It's a great question. Daddio has a fantastic question. I love this question here. I just found 82 cents in my sofa. Where can I invest it to become more financially literate? Let's see. Well, if you're probably asking yourself at this point, Daddio, what is OVTLYR and how does it work? Well, OVTLYR shows you what. Damn, I missed my slide. Be fearful when others are greedy, and greedy when others are fearful. That's what old Uncle Warren used to say. And OVTLYR shows you if investors are acting rationally fearful or greedy, and by how much, allowing you to get into the stock before the OVTLYR move happens. Now, if you're ready, Daddio, to save time, make money, and start winning with less risk, you can do that in just 3 easy steps. You can take those 82 cents that we just talked about And grab the annual pass for OVTLYR for just 82 cents a day. Or if you're on the monthly plan, you can hit the save 64% off the regular monthly price. Start using the OVTLYR 9, which I show you how to do every single day, and sit back and relax because you just found the easiest way to save time, make money, and start winning with less risk. I appreciate the layups, Daddy-O. You're the best. Joe. Joe is one of our university graduates. Everybody commend Joe by saying Joe in the chat. Outstanding work, Joe. Joe is one of our Alpha Group graduates. Could you mention a proven edge and what percentage to look for on this metric to reach? Okay, this question I'm very excited about. So I want to pull up my 2025 returns this year and my 2024 returns last year. Now, one of the reasons that I was so successful last year is because I followed my edge and I stayed in cash and I didn't F up my account, right? Now, one of the things that's happened to me this year, unfortunately, is I hit a losing streak. So I'm at a little bit of a drawdown, but I'm still up 21% for the year. My personal compound annual growth rate for the last 5 years is 44%, which is fantastic. I love having a 44% compound annual growth rate, okay? Now, looking at this last year, 2024, 91.37%. If we take these numbers and we put them into the Monte Carlo simulator, and we say my win rate was 69.39, okay, 69.39, and my average win was 1897. My average loss was 1790. Then what is my expectancy? Now, first thing you'll notice here is that last year, my average win to average loss was actually pretty close to each other, but my win rate was super duper high. This year, my average win is close to double what my average loss is, okay? But my win rate is down somewhat. So that's how I'm still profitable. So looking at this, we can see the worst case outcome here, and this is what I focus on, is the worst case outcome, right? If my worst case outcome is that I make $176,000 this year, I don't know, I feel like that's great. I would feel like that is pretty damn great. But let's take a look at the 2025 results so far this year. Average win rate, 46.88. Okay, let's take a screenshot of this so I don't forget. Okay. Win rate, 46.88. Average win, 47.48. Average loss, 28.73. And let's run that. And you'll see something that's a little bit different, right? My expectancy in the worst case outcome is still positive. It is still positive, but it's only $18,000. Now to you, you might say, $18,000, that is awesome. I wish so bad that my worst case outcome is $18,000. To me, that's 10 times less than where I want to be. That is significantly under where I want to be, right? Come on, there we go. Now, final equity, actually, this year, in the best case outcome, is tremendously higher than last year. Crazy as that is. The average equity is not all that dissimilar. It's really not all that dissimilar. 278 on the 2024 results and 253 in the 2025 results. But it's my worst case outcome, this number here that Chris focuses in on, right? And if this one is 18,000 versus 176,000, I need to put some work in. So a mid-year review allowed me to see some areas where I can improve upon not just my entries, but also improve upon my exits. So even though I show a higher max outcome, even though I show approximately the same average outcome, my worst case outcome was not good enough, which prompted me to make changes to my plan. And now, as we are making the changes inside the platform, so it'll make it way easier on you. You don't have to do anything. It'll just be automatic. It should increase your worst case outcome. How cool is that? How cool is that? So I love having the expectancy. That is something I put in my back pocket and I pull out every single time I need to have maybe a little boost, right? A little bit of confidence boosting right there, right? Is that if my worst case outcome is that I'm still wildly profitable, I am doing something right. And that's what I want for you. I want your worst case outcome to be wildly profitable. And the only way you're going to do that is if you learn how to save time, make money, and start winning with less risk by watching one of these two videos. Have a fantastic day. We'll talk soon.